Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is the earnings special edition where our focus will be on HDFC Life, the leading private sector insurer, which has already reported its Q2 numbers. It's reported a 15% growth in the standalone net profit, which is coming at 433 crore rupees for the second quarter. We've also seen the net premium income during the July to September quarter increase by 12% on a year-on-year basis, and it come to 16,570 odd crore rupees. The company has also delivered strong new business premium individual APE growth of 31% to 5,864 odd crore rupees during the first half of the current fiscal year. And that's largely supported by 22% increase in the number of policies that have been sold as well. Also, the value of new businesses for H1 has risen by 17% to 1656 odd crore rupees as well. Not just that, and even the assets under management for the insurer has now stood at 3.25 lakh crore rupees as of September 2024, showing an increase of 23% in H1 as a whole. To detail for us what has really contributed to this performance in Q2 and what lies ahead for the company going forward, I'm now joined by the top management of the company. Ma'am Vibha Padalkar is with us. She's the MD and the CEO of HDFC Life. Warm welcome to you, ma'am, and thank you so much for taking the time out. First up, congratulations, solid set of numbers yet again, as was largely expected earlier on too. How are you assessing the quarterly numbers, especially with regards to the regulatory and the tax changes that have occurred? So how are you assessing the numbers on your own?
So thanks, Sakshi. Yes, we've had a fairly holistic and satisfying quarter. Let me start off with top line growth to begin with. We grew at 31% overall on an APE basis. Also, what is fairly good is that we grew comfortably ahead of the sector, wherein almost 400 basis points faster growth versus the private sector. Even in terms of number of policies, and this is important because number of lives covered, we grew at about 22%. And as a result, our market share expansion happened, and we ended the first half of the year at about 16.3% market share expansion. We also reached a new watermark in terms of market share, crossing 11%. This is overall at an industry level. Protection grew well, our sum assured grew well, and hence our embedded value also crossed the watermark of 50,000 crores. There was also an increase in terms of quality of business, wherein both our 13-month persistency as well as our 61st month persistency materially improved. So all in all, we're fairly happy to deliver a PAT growth for the quarter of 15%. Our back book helped in the PAT growth, growing by about 18%. So yes, I think given all the changes, like you said, both the industry and HDFC Life, I think can confidently say that we are poised well to take advantage of opportunities clearly that are there for the growth of the insurance sector.
Okay. Ma'am, I'd like to come to the margins part, especially for value of new business margins. Could you give us a little more perspective as to, where are we headed? And were there any pressures this time around too? And will these pressures escalate in Q3?
Like I've articulated in the past also, in the first half of the year, equity markets have remained elevated. And we are of the belief that we have to be where the customer is, and we can't second guess customer preferences. As a result, unit link continues to be slightly elevated, and this certainly has some impact on the standalone margin. So in terms of articulation of our strategy, we want to continue to grow faster than the sector, like we have done in the first half of the year. Second, we have mentioned that value of new business growth will be in the range of 15 to 17%, and we are on the upper end of the spectrum, growing by about 17.6 odd percent. And margin will be an outcome rather than us being tethered to a particular number as margins. At the same time, there will be a floor as far as margin is concerned. We don't expect margins to drop very significantly, say by 400 basis points or thereabouts, but it will be somewhat range bound just given where equity markets are.
Okay. So, ma'am, we've actually seen a very strong first half. Q4 is going to be an extremely strong one again because of the seasonality factor. It's only about the Q3 that we are now going to be a little concerned about, especially because the surrender value regulations also come into effect now in October. Do tell us how should one really read through what is going to be coming in as a standalone Q3 quarter then?
We've started off well. So October month is looking fairly buoyant, and we will continue to attempt to grow faster than the sector. We will see how we can continue to be in the range of about 15 to 20% kind of a growth rate as far as the new business growth is concerned. And on a full year basis, we should end at about 18 to 20% growth in the new business on an APE basis. That's what we are gunning for. And like you say, hopefully we'll end reasonably well, both for us and the sector in terms of growth in Q4.
Okay, so ma'am, total APE and the retail APE guidance for FY25, are you maintaining that? And is there any upward revision on that front?
We have given an upward revision in the call just now, the investor call, and the revision in terms of guidance is 18 to 20% on a full year basis.
Okay, got that. So ma'am, going forward from here, growth targets for FY25, how should one be really looking at on all the key parameters then?
So we're looking at a holistic scorecard. We're, like I said, looking at growth in the region of 18 to 20%.
Yeah.
The new business or the value of new business growth in the region of about 15 to 17%. And we've already delivered on the upper end of that band, continuing to grow protection, continuing to improve our persistency, keeping an eye on growth in Indian GAAP profits as well, dividend paying that it matters from that perspective. And return on embedded value, we've already crossed 16%. Hopefully, we will continue to add to our embedded value and continue to strengthen our return on embedded value as well. So this is really the work cut out for us in H2.
Okay. Ma'am, help us understand as far as the ULIP share is concerned. You have earlier articulated that it is likely to moderate. So going forward, are you going to see a significant moderation on that account? How should one be expecting that going forward from here? And versus ULIPs, how does the individual sector do you see? Which individual sector would you see accelerating then?
So we are beginning to see a little bit of tempering in unit linked. Unit linked in Q2 has come down to about 34%. It's still a little bit higher than what we traditionally have been pegging that segment at. But like I said, that's the pull of the markets as of now. So we expect it to be in this kind of a range unless something very dramatic happens on the equity markets. We would expect to see unit linked around that. Non-par has been a good story wherein we have grown upwards of 70% in the non-par savings segment. And you will recall that after the tax changes, it took some time for the non-par segment to get back on track. And I'm very happy to share that that segment has shown fairly good levels of growth. So I would expect non-par to be in the 40% range. Like I said, unit linked to be around the 35-36% range. I would expect to see some uptick in par, which has been somewhat soft in the first half of the year. Should get up to about 20% in H2, and the rest will be divided into contribution by our retail protection and annuity.
Okay, ma'am, especially because we are seeing a consistent rise in the SIPs within mutual funds. I wanted to understand what has been the impact on the money flow to ULIPs particularly, and how do you see that going forward?
It has been, ULIPs have continued to grow very well. And whether it is SIPs, whether it is in any other kind of direct equity play, that also is a fairly attractive proposition and pull of the market today. So it's a combination of this, and there will be different customer preferences that we will see. But unit link certainly has continued to see an uptick and something that we would expect to continue in H2.
Okay.
That's
Okay.
how.
Right.
And just to give you some numbers, unit link
Yes.
in Q2, it has seen about a 40-odd% growth, while non-par has grown about 75% on a standalone Q2 basis, but unit linked has also grown fairly robustly.
Okay, understood. So, ma'am, compared to the industry, you've already been posting industry-leading growth right there. In FY25, how should one see industry growth, and where do we see HDFC Life at? And going forward, what is the trend likely to be?
Yeah, industry has also seen growth of about 24% and 21% overall for the industry. That's in the H1. We have, of course, grown 28%. So a good level of growth is already in the bag. I see this momentum continuing, and so in the comfortable 20s is where, or somewhere hovering just around the 20% mark on a full year basis is where I would see, all things being equal, the industry ending, and we should end faster than slightly at a faster clip than the industry growth.
Just a word on the outlook on the value of new businesses as well, ma'am. You had earlier articulated that you expect this to double every 4 years, so to speak. So how does one really look at that aspect going forward, where we are at right now? How soon do we see that happening?
So we still have been delivering, and I would still say that we will be doubling every 4.5 years. That's the outlook. A little bit of a softness that you see at around 17% growth that we have delivered, but getting to 18-19% growth should certainly happen in a 4-year cycle.
Okay, wonderful. Well, thank you so much, ma'am, for speaking to us and sharing all these insights from the quarterly earnings. I wish you all the best for the upcoming quarters as well. And it's always a pleasure to host you on Business Today Television. Thank you so much.
Thank you very much.
All right. With that, viewers, we wrap up this very special conversation, but do stay tuned. There's a lot more lined up for you going forward too.